And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show, brought to you each and every Friday afternoon. And this is the show where we put you in front of where the action is in the broader markets, all with an eye toward helping you formulate a plan of action, not only into next week, but beyond. So lots to cover as usual. Very, very interesting week this week. As always, we will go ahead and take a close look at the broader markets and dive in behind the curtain, so to speak, and see what is really going on. We've seen a bit of very interesting rotation as well as continuation rallies in some other areas. Also, we're going to take a look at uncovering stocks that are poised to trade higher on news. There were a couple of news items out this week, which we'll cover, and take a look at how you can benefit from that news. Also, playing the recovery rally in healthcare stocks. And this is an area that we've had our eye on for some weeks now, as healthcare generally has been lagging, and it woke up with a vengeance this week. So we're going to take a good look there. Also, pullbacks among growth stocks. There is still activity that is taking place among some of these bigger growth stocks that have pulled back, that are allowing an opportunity for those who may not have entered their strength in the beginning parts of their rallies. So we're going to take a look at that. And then paying attention to these Fang stocks. They are being buoyed, and we'll just take a very quick look because they are such a big part of the markets. They are very much worth paying attention to. So let's go ahead and get started. As usual, we are going to go ahead and take a look at the S&P 500, a daily price chart here, get a real good feel of where we are and where we may be headed. So we can see that the S&P 500, it did pull back a bit today, but not as much as you would think, given the news increased COVID cases. So net at the end of the week, we can see that the S&P 500 did close the week just above this 10-day simple moving average. Actually, I'm taking a closer look. It does appear to have faltered just a bit, but we're talking about 10 points. So it is hovering very nicely in that area. We are finding support at this upward trending 21-day simple moving average. That's your pink line. And the relevance here is these simple moving averages can act as support, going back to this nice upward trending bullish phase, or they can often act as resistance during a downtrending period for the market. So ideally, we want the indexes as well as your individual stocks to be trading above these potential areas of resistance, above all of these simple moving averages. But let's take a look, because even when we look at longer term simple moving averages, this red line is your 50-day. That 50-day trending upward is really bullish. That's more of an intermediate type of indicator as far as being forward looking. So we like to see that. And ideally, if we can get that crossover, that 50-day up above this longer term 200-day simple moving average, even adding to that bullishness. So again, on this daily chart, we can see that the RSI up there at the top is above that net neutral 50. So we are in good standing. I'm just going to make a quick change here, swap the MACD down on the bottom out for stochastics. Stochastics for broader market indices are faster moving, so they can be more telling. Pointing out here that the stochastics did come out of this period of oversold and is now trading above that 50, which is net neutral. It is positive. The latter weak kind of broader weakness in the markets has tilted it downward, but net we are positive overall in the broader markets. One other view we can take a look on this S&P quickly is the weekly chart. at a longer term chart, and this is true for stocks as well as indices, you are going to get a longer term prognoses or outlook that can be derived from that. So let's take a look at this S&P. Each bar here is 1 week. This case, I only have 2 simple moving averages. The red is the 10-week. The blue is your 40-week, so your 50 and your 200-day simple moving averages. A couple of dynamics taking place here. The RSI positive on this weekly. This is something my MEM Edge subscribers are well aware. We have been on the prowl. We did turn positive on the weekly back here about 3 to 4 weeks ago. And the significance is that the S&P 500 was coming out of an oversold position on the weekly. Highly unusual. The last time this oversold position occurred was back in the 08-09 bear, and the subsequent rally out of an oversold position on the weekly historically can be very long lasting and quite powerful. So we have that positive RSI characteristic. Here we are with that S&P breaking above this blue 40-week 200-day simple moving average, quite constructive. On the weekly, I do use the MACD. It's going to be a little bit slower and more telling. And this week we can see that the moving average convergence divergence momentum indicator turned positive. So let's go ahead and take a quick look at the most recent emergence out of a bear market, taking us back to 08 and coming into positive territory, 2018, into the 2019 recovery rally in January. Take a look here. We can see the RSI on the weekly turned positive, right in line with the price of the S&P 500 breaking above that 200-day. And then take a look down here at the MACD. It turned positive. So all very much in line on that same weekly price action here, taking us into the beginning of 2019. So we are in a similar bullish position at this point in time. Now, we are going to go ahead and drill down a bit further. This is our candle glance view of the 11 underlying sectors within the S&P 500. So we want to really drill down. It's one thing to know that the broader markets are in good standing and healthy, but more importantly, certainly from my work, is uncovering where that relative outperformance is. Where are the money flows trending and going, so that you can take advantage and participate in that strength in underlying within the markets. So within these 11 sectors, I've gone ahead and added an RSI, relative strength indicator, sorted it descending, and here we can see quite clearly where the strength is in the market. So take a look here. Technology still continuing to lead the charge. For those of you that follow my work, you know that we have been looking at technology well back into this April period with select underlying super powerfully strong areas. And I do want to hopefully be able to spend a minute or two and get into that, because these stocks, particularly with my MEM Edge report, we have a lot of stocks that had double-digit returns this week that we had suggested as buys, and that is relative to an S&P that was up almost 2%. So again, technology, important to note that this continues to be a real leadership area, not just because of the chart. There are underlying dynamics as far as software, semiconductor areas that and companies that produce products that are needed during this lockdown periods, and they have exhibited signs of growth. Next area is Xlc Communication Services. This is going to be a lot of your internet related. Certainly Netflix is one of the leaders in here. We're going to take a look at that among those Fang stocks. Consumer discretionary, and we did talk a little bit about the concept of trading on the news. And actually, I did fail to go ahead and show that. I'm just going to take a really quick second here. And I do like to generally uncover some of the highlights as far as news items that took place last week. This is going to help set the stage as you plan going forward. So on Monday, we did see the Federal Reserve come in. They did a lot in the way of corporate and otherwise bond buying that really helped buoy the markets, provided liquidity. Monetary policy is continuing to be supportive, and that's important. That's a really important tailwind to have behind the broader markets. But we are unfortunately continuing to see a spike in COVID-19 cases. Apple reported today that they're closing 11 stores in those higher emerging case states. So that is a counter to the Federal Reserve's bullish actions. However, interestingly, we are seeing the markets being rather resilient to this concept that we could go back into a further lockdown. May retail sales, huge news. Retail sales were up 17% over the month of April. A lot of celebration there. So we are going to take a look at that retail area, how you can take advantage of that bump up there and the anticipated growth going forward. Year over year, compared to last May, it was down, but that's not unexpected. The retail sales up over the month of April was entirely unexpected and very bullish news. Unemployment, we are steady. That is positive, although we did have another week of 1.5 million new filings. The sense is that the worst as it relates to unemployment is behind us. So let's go ahead and carry on, because again, we can see consumer discretionary up here in the forefront, like in those retail sales numbers. And then as we drill down, you're seeing, for instance, staples up here in the forefront. I would not put a lot of relevance, because drilling down and taking a look, it is a lot of those vice stocks, alcohol and tobacco, not to be against those stocks, but they are not heavyweight and for my work really relevant, but that's why we are seeing staple stocks up here in the forefront. And let's take a look. I talked about healthcare coming back, and we can see that healthcare stocks really did suffer. This drop last week, a lot of big pharma stocks suffering, but they take a look at the recovery from this pullback to that 200-day simple moving average. Nice bullish break back above all of these shorter term simple moving averages. RSI MACD positive. We're going to drill down, because this is really worth taking a look at as to where within healthcare, so that again you can take advantage of that strength. And then we can see real estate, financials, these lagging areas. This is all about a pullback on that recovery optimism, the sense that we could see continued deteriorating fundamentals as far as corporate lockdown, the rents and leases on these REITs being impacted and so forth. But by and large, they are generally still constructive despite their lagging overall performance. Let's drill down a little bit further here. What I want to do is share with you really kind of critical, certainly again from my work, I'm on the prowl for those outperforming growth stocks. So a lot of the indices and areas I'm looking at are going to be focused on that. So we do have the broader market indices here, as well as some of these super hot growthier areas of the market. And again, sorted by RSI in descending. And let's take a look. Again, those of you following my work will know that we have been really all over the superior outperformance among software stocks. IGV is the ETF that I use for that. And software stocks were up 5% this week. And again, this is an area that is not only a re-lockdown play, if you will, for lack of better wording, but also these companies have put in and exhibited growth. They've reported earnings. A lot of these leadership names among software have outlooks that are very promising. So this play into software stocks continues on. Gosh, I really want to get to how you can play. Not a lot of these stocks are pulling back. You're seeing them just continue higher, but we will take a look at two names in software that have pulled back and potentially could be at buy points. And we talked about the move back into healthcare, and here we are. This is a good portion, a good reason. This is IBB, the Nasdaq Biotech ETF, and let's just take a look, because this is what you want to be on the prowl for on a pullback, not just in ETFs, but also individual stocks. So we can see IBB pulled back very orderly to this upward trending 50-day simple moving average. We have about 5 leadership biotech stocks on our MEM Edge report. On this dip, the RSI turned negative. We held those stocks, but we advised not to enter new positions until we got bullish. And last Friday, we did, over last weekend's report, highlighted stocks that could be bought with this potential bounce. And boy, has the move been really superior, with still upside ahead as these biotech stocks come back to life. We can see the RSI is positive. Take a look at this MACD, black line just poised to come up above that red. That is your your momentum shift being presented here for you to take advantage. So let's go back to some of these other growthier areas. We talked about technology, and that in turn is going to take us to the Nasdaq Composite. It also is heavily weighted with biotech. So this leadership area of the market is retaining its leadership status very firmly above its 10-day upward trending simple moving average, RSI MACD, quite positive. And really, when the leadership area is continuing to advance, that is going to signal a bullish market. If we see a breakdown in leadership Nasdaq, technology, then we can start to worry. But for now, very good standing. Semiconductors, another leading area out of technology, and this particular area was also outperformed 3 times the broader market this week. Lots of interesting names in here. And I've talked in the past, I'm not sure here, but certainly with my report, the concept that global chip sales are on the rise, lots of anticipation for earnings growth to continue among semiconductors. So let's go ahead and move down. There's one other ETF I wanted to highlight quite quickly here, and that is, we talked about retail sales very unexpectedly, and a drill down behind the numbers on that big retail sales is predominantly internet related. And I did want to point out to you XRT. This is one of those, this is the S&P Retail ETF, all about internet related online sales, retail companies. So we're going to take a look at a couple of those that are really looking very, very constructive here, not only because of the retail sales numbers, but because the companies have actual earnings growth in place as well as going forward. One other sidebar on that retail sales number, last Friday, in our show, I highlighted the fact that car sales had picked up in China and as a model for the US, and indeed car sales were a huge component in that big pickup in April retail sales. Let's go ahead. We would be remiss to not just at least take a peek at this volatility index. This is your fear index. You're going to want to keep an eye, because we can see today it bumped up 6% on the coronavirus case increases. World Health Organization came out with an announcement today that it's not just in the US, globally, they are seeing a pickup. So we're going to keep an eye on this fear index, because a spike in that is implying increased volatility. But there really is a have and a have not period here with this market, where those areas that are really showing strength and growing despite the lockdown really are continuing their rallies to new highs. So that's a look at the markets. I think we're going to take a very quick break here, and from there I'm going to go ahead and go into some of those turnaround stocks in healthcare, retail as well, and we'll take a look at other pullbacks that you can potentially take advantage of. So we'll be right back. During every bull market, there are a select set of stocks that far outpace their peers. They trade much higher and much faster than the rest of the markets. The reason? These select stocks have a set of characteristics that history has proven are common among big winning stocks. My easy-to-follow course will teach you the skills of a lifetime so you can learn how to uncover and then successfully trade these fast-moving stocks. Take my 5-part course now by going to meminvestmentresearch.com for this limited time offer. And we are back. Let's go ahead and drill right into the healthcare area, because it's not all areas that are experiencing a rebirth, if you will, after coming back from these pullbacks that experienced within that industry. And biotech, again, as you know, as I noted, has really had a strong week. That's going to be the primary area. So we're going to take a look at some of these biotechs that have, first of all, have already reversed, to give you a sense of what you are going to be on the prowl for, not only within biotechs, but outside of, as far as that pullback. So here we're taking a look at Bellwether Biotech Amgen. We can see the stock hit a new high in price mid to late May. This is a daily price chart. And take a look. Now, many of you may be discouraged had you owned Amgen while the rest of the markets were powering higher. This stock was in no way participating, but longer term investors will want to pay attention to the stock's action, not only at this 50-day, but also at the 200-day. And in fact, with Amgen, it pulled back very orderly, found support at that 200-day. And when you are examining that downtrend reversal, a couple of characteristics: you want that stock's price to break back above, again, these simple moving averages, so that they can now act as support. Yesterday would have been that signal as it broke above not only the 10, the green, the purple is the 21, but it also broke back above that 50. That's your signal yesterday. We also had a confirming RSI that was positive. Let's take a look. MACD just dipping up back into positive territory. So here is that pullback period, the MACD coming down. So currently we have that black line up through the red, indicating a potential downtrend reversal. We can go back historically and see that action here. But today the stock is up 3.5%, huge volume. That is a confirmation, and I would anticipate this stock to trade higher, but certainly you would not want to chase it. A pullback would be ideal. Let's take a look at another. This is a stock in the healthcare space that is on the MEM edge list. And again, over the weekend, we highlighted this as a buy, and I'll tell you precisely why. This is QDEL, and the stock, we can see, had hit a new high, gapped up here on earnings, and in line with the sector, pulled back. So again, we held with this stock, and then last week into Monday, this big gap up here was up 18+% on Monday, but what attracted us over the weekend was that similar characteristic where the stock broke back above those simple moving averages, back above the 10, back above that 21, and it did so on volume. So that captured our attention, also in line with last Friday's break above simple moving averages. We got that RSI trending upward. So we can see this nice, powerful downtrend reversal that took place, coupled with the downtrend reversal in MACD. So a little bit of exhaustive action here, but certainly poised to trade higher given the huge volume characteristics on that reversal. So let's take a look at some other stocks that we can look at that are candidates currently. This is a stock that is in the diabetic space, DXCM, and again, a nice orderly pullback to this upward trending 10-day simple moving average, reverses above the simple moving averages, poised to trade higher, MACD trending upward. I think we have time for one other name that is in this healthcare space, Illumina. Actually, we are poised to break out of this space, but again, conceptually, when these downtrends reverse, you're going to be on the prowl for that break above the simple moving average with a confirming RSI trending upward. So let's take a look. I would be remiss to not carry on and share with you what is going on among these Fang stocks. So I'm just going to take a minute here and take a look at these stocks. Some of you may be focused in other areas. It is important to pay attention to these really big heavyweight stocks if they are in constructive their charts are constructive, they're in uptrends. That's going to be another way that the markets are buoyed. These big stocks are being supported. A lot of institutions are coming in, they're putting their money to work, and that's going to help keep the broader market's uptrend in place. This is Amazon on the daily. They continue to come out with constructive news relative to their online sales. They're continuing to hire, and we can see the stock in a very confirmed uptrend. Let's take a look at Netflix. And this, of course, is that lockdown play, so to speak. But they did have this gap up. The company is seeing tremendous growth, as you can imagine, not just in the US, but globally. So we had that gap up and a continuation rally. Take a look at this downtrend reversal on that pullback. And we actually very recently added this stock based on that. And so we can see the stock currently now is poised to very constructively break out of this 1 month plus, I would say 6-week base. Microsoft, we would be remiss to not share this. We talked about software stocks overall. Microsoft had a big gap up earlier in the week and is also poised. This is a 2-week base, poised to break out of that area. And then we can move on to retail. And what I did want to point out to you again with that XRT, it's going to be primarily online retailers. So I wanted to point out to you a couple of these are names that are on my MEM Edge report list, so I'm super familiar with them. This is Etsy, and we can see the stock had a really lengthy period of consolidation after this excessive nice move out of the bottom. But more importantly here is the action this week. It's up another 10% today as the stock breaks out. Huge volume. Again, would not suggest chasing it, but there is evidence of further upside. You're going to want to pay attention to this overbought potential condition here, but this is one of the bigger holdings in XRT, which is one of the leadership retail areas of the online area. Wayfair, another big winner. A lot of people refurnishing and making their at-home areas look nice. So we can see Wayfair breaking out of this nice 6-week base very constructively. And one other area that we can take a look at, and this has been continued to be a really constructive theme. This is Chewy. As individuals are at home, they are either acquiring pets or really taking super good care of their pets. Chewy is an online pet retailer, food, other products, and we can see it pulled back to this 21-day simple moving average and is poised to break out. And I am going to go ahead and leave it at that. Actually, one last stock on that pullback concept is this TDOC. This should be your 21-day poised to break out. I did want to point that stock out, but I will leave it at that. Those of you who are not familiar with my work, please visit my MEM Edge MEM Investment Research website, and I do have a special there. 4-week trial of my Edge report can get you in front of all of these areas as well as individual stocks poised to continue to benefit from this bull market. Have a great weekend, everyone.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.